Joining us now for more is Mr. Glenn, and nice to see you. Good to have you back, Mr. Kelman. So what is the outlook here? It seems like there were great expectations around your stock and around your company, but you were a little cautious sounding in the guide. How long do you think this is going to last?
Well, the outlook is murky. Q2 disposable income was actually up in the United States because unemployment benefits were so strong. But now we have questions around whether that will continue. And in the meantime, the economy is split in two, where the housing market is doing incredibly well, even as gross domestic product contracts. America's thinking more about the home. More people are relocating because of work from home. So we're just seeing these two trends collide, and we're not sure what the outcome will be. But the immediate effect is very, very strong demand.
At all price points, Glenn, or just as you're kind of suggesting in a sort of two-tier economy that it's only people that are relatively well off that are benefiting from these low mortgage rates?
Well, it's really across the board except for condominiums and urban centers. Those are a hard sell right now, both because of the demographic. The people who would normally buy those products are now unemployed. But also you just don't have as much demand to live in a city center. So those are the areas that we're most worried about. But single family homes selling for $300,000 in the middle of the country are being snapped up by Californians who are leaving Los Angeles and San Francisco for more affordability. So I think it has been fairly broad. There's some softness also in the luxury end of the segment, but not much.
Feels like there's another disparity going on that's sort of strange to look at within the housing market, Glenn, which is, home sales are booming. People who have the money and who have jobs are getting very low mortgage rates, and they've got good credit. And then you're facing potentially this wave of evictions if we don't get an extension of the federal eviction moratorium for renters. I mean, how do you process that? That seems like two extremes within housing as well.
Well, first of all, we process it as a social calamity, regardless of how it affects our stock or the economy. We have to think of those families who could be out on the streets, and hopefully society will intervene in one way or another. If you look at the data right now, about 8% of mortgages are in forbearance. That's the program that lets you defer a mortgage payment for about a year. In January, the delinquency rate was about 3%. So clearly, the people in the business of evicting folks out of apartments and houses, of handling delinquencies and foreclosures, are anticipating a big 2021. And that's one of the shoes that we're really worried could drop next year. So right now, inventory is very low. It's at a 6-year low, but some inventory could come onto the market just because of the hardship that some Americans are facing. Right now, almost everyone is locked in place. There are very few people who want to sell a house. There are very few people who want to put their home on the market, have strangers walk through and potentially cause infection. So something's going to give. I don't know what it is.
Glenn, just quickly on the structural shift, you mentioned San Francisco, LA. Where are the places that could be set to suffer the most? Is it just simply the most expensive cities that also happen to be having high tax rates? And are we going to see a massive fall in prices there, a small fall in prices there?
Well, I don't know that we're going to see a massive fall in prices. The first effect that we've seen is just that the bidding wars are more intense in Kansas than in California, which is just a Twilight Zone kind of experience for me. But certainly those cities are under duress because their tax base is headed for the hills. So they are dealing with all sorts of social issues, and at the same time, people are leaving. So a lot of Californians are going to Texas. I think that that's going to cause some softness in home prices there. But right now, because there's such a nationwide housing shortage, because everyone is stuck at home thinking about how they can't stand the drapes in this place and they ought to just sell it, we are seeing more people buying homes in every city in the country. So even in, say, New York, you're seeing some housing demand. It's just much stronger in the areas outside of New York than it is in the city itself. And for condos, that's where it's really soft.
Glenn, as always, thanks for joining us.